Hello, I'm Charlie Gibson. I'm Head of Mining Research at Edison Investment Research. Now, gold, my very favourite subject, and this, I believe, will be a pivotal year for the yellow metal. Now, quick fact about gold, if you were to look back over the period since it was effectively disconnected from the US dollar in 1971, you would see that gold has, on average, performed, given a positive return in nominal terms to investors of 10% per annum. There's a standard deviation around that, it's plus minus 14%, but 10% per annum is not a bad result in US dollar terms, and especially if you look at the performances of stock markets. Look at the FTSE 100, for example. Where is it? Well, it's about 5.5%, about 5% even higher in sterling terms than it was 20 years ago. So if you've got something that's giving you 10% a year, that's a pretty decent return. Now, what are the headwinds for gold at the moment? Well, let's not pretend they're not there. They certainly are, and those headwinds include expectations of interest rate rises in the United States in particular, expectations that there is no inflation in the system, the Federal Reserve's asset reduction program, the taper program they have, and to some extent the recent strength of the US dollar. What is working in gold's favor? Well, you can see that there are question marks over almost all of those things. If you look at, for example, interest rate rises, well, we were not very long ago looking at, well, 1, 2, 3, maybe even 4 interest rate rises over the course of 2019, and now all of a sudden, on the basis of the Federal Reserve's last pronouncements, we're not looking at an interest rate rise until 2020 at the very earliest. The Fed's asset reduction program, now this is the real key for gold in my opinion. There is a very statistically strong and statistically significant relationship between the gold price and the total US monetary base. Now, if the Federal Reserve reduce the monetary base as they're expected to do as a result of their taper, then there is no doubt that that represents a headwind for gold. But it also implies a very substantial headwind for the United States economy as well. And when push comes to shove, we calculate that that could be to the tune of, well, maybe as much as 7%. Look at it this way. The Fed is hoping to take about $500 million out of the US economy over the course of this year. Now, in round numbers, if you put that onto a $15 trillion economy, that's about 7%. So that's the extent of the potential deflation. Now, can the United States economy actually withstand that? Well, I think not. Can it afford some reduction? Yes, but if the Fed goes through with its reduction program as it's currently planned, then it would take its balance sheet back to where it was before QE3. So what we'd really be saying is there was no need for QE3. Well, I think at the time everyone believed there certainly was a very great need for QE3, so the idea that somehow we don't need it anymore and it's gone out of the window, I think is very difficult to substantiate. So yes, will the Fed continue with its tapering program? Yes, it certainly will. Is it going to be able to take it all the way to the end? No, I don't think it will. And at that point, I think that's the moment when we're going to see the real jump in the gold price. The absence of inflation, we talked about that. One of the ways in which the Fed can achieve effectively a rebalancing of the economy is with inflation in the system. And if they can't put up interest rates, that means potentially negative real interest rates or zero real interest rates, which is very close to where we are at the moment. And that, of course, will then start to weigh on the dollar. In other matters, have you ever seen more geopolitical uncertainty? Have you ever seen more economic uncertainty? Well, I certainly can't remember periods in history where geopolitical and economic uncertainty have ever been higher. So 2019, the year for gold? I definitely think so. I'm Charlie Gibson. I'm signing off. And until our next meeting, you have a capital day.